So in this video, we are going to talk about best day trading strategy. This is the strategy that I use personally daily, every single day. I use this strategy for my profit account, personal account. Probably this strategy is very good. So you can implement this strategy today and check how it can work for you. So what I'm going to assure you is before the end of this video, we are going to break down a case study of all the trade we take so far this week, and we are going to see both the wins and the loss in this video today. And probably you're going to see how we implement the strategy and how we can trade the strategy every single day. I mean, this is a day trading strategy. It's not a swing strategy, it's not a scalping strategy, it's a day trading strategy, especially for students. So if you can stick around to the end of this video, you have a lot to learn. You will learn the time frame you can trade the strategy, you learn the pairs you can trade with this strategy, and the time you can trade with this strategy. So have it in mind and stick around to the end of this video. As we dive into charts, I'm going to explain it for you. These are the results for this week, then I will send it for you. Stick around to the end of this video and you have a lot to learn with those case studies we are going to break down.
The first thing, as I earlier said, that I will show you step by step, the first thing we do is that we will add up the pairs that we trade. So you come up to your watch list, you add gold, which is SAUSD, you add GPP, which is GPP USD, as you can see, you add Euro Canadian dollar, which is Euro CAD, then you add US 500, which is known as SP500. They will add these 4 pairs. They are very good in this strategy, and you can also check it out on your own page. Or these are the pair that are by tested. I have a current data that is implicable in the market, so you can use this pair, or you can test it in your own pair that you trade by testing and seeing how the win rate is before you implement it in live trade. So after adding up your pair, the next thing is the time frame. So what you can see here is in our time frame, we are trading at 15 minutes time frame. We are trading at 15 minutes time frame. Like here, this is 15 minutes. We're not going to 1 hour, we're not going to 4 hours or more, or 1 minute or 5 minutes. Everything you're going to do is on 15-minute time frame. We are going to analyze on 15 minutes, we are going to execute the trade on 15 minutes. So just have that in mind. Just have that in mind. The next thing is go to our indicator tab and search for this EMA 20, 50, 100 and 200. This is for our directional bias for from Dr. Sweet. As see here, they add it to your chart. Once added to your chart, it will look something like this. You look something like this, then you will set it. Firstly, it will look something like this, then which is this one, all of them will check, but uncheck this one, don't check it. This is 20, remove the 20, then you take the 50, which is this green one, you take the 100, which is the blue one, you can change the color you want, and you take the 200, which is the red one here. So once you add it to a chart, this is how it will look like. Let me show my I can see. Once you add it to a chart, this is how it will look like. So this is it. If add it to a chart, this is how it look like. Let me zoom out so I can see. This is how it will look like if you add it to your chart. Then the next thing you will do is also go to an indicator tab. This is the two indicator that you are using. So you go to indicator tab and search for this Sonar Lab session. So if I'm in this Sonar Lab session, they add it to your charts. If you add it to your charts, it looks something like this. It will look something like this. This is for our sessioning and timing. So it looks something like this. But for the settings, let me show how you can set it. For the settings, you go to the input. This is my time zone. As you can see, the session start from 12 o'clock to 5 o'clock a.m. From 12 o'clock midnight to 5 o'clock a.m. As you can see. And also the London session start from 8 o'clock a.m. to 10 o'clock a.m. in the morning. Then the New York session start from 12 o'clock to 2 o'clock p.m. in the afternoon. So this is how it is. You can implement it. You can uncheck these ones, as you can see. Or uncheck them. If you want, you can leave it a chart, but this is the most important ones. The ones added, this is how it look like in your charts. Then how can you trade this strategy? Basically, this our strategy is ICT power of trade, or ICT Judas thing, anything you want to call it. It's normally based on liquidity sweep. So first, let me show you. After adding those things, after adding your pairs, knowing your time frame, adding this indicator, the next step is sessioning. So for this sessioning, I will show you how you can use your directional bias. So for this sessioning, this is how it look like. Let me see, this is London Asia session, and this is London or New York session. Let me take it like this. So what you're waiting for, if you're looking for buying opportunity, what you're waiting for a sweep of Asia low like this. You're waiting for a sweep of this Asia low. Then once I have the sweep, our confirmation is the next thing. I don't know if I'm fast on this. Our confirmation is the next thing. Then once you sweep the low, let me say the candle there for me is bearish. Then once you sweep the low, the next thing you look for is the opposite candle, which is bullish, because the candle that sweep below may be bearish. Then once you sweep the low, you wait for the bullish candle to close on the same 15 minutes. So once the bullish candle close like this, let me say the candle is this one. I mean this one. This is our entry model. Then have wick on low and also have wick on high like this. You mark out, in case you don't have wick, no problem. You just mark out your the high of the candle like this. You mark it out like this. Then on this side of the candle is where you put your entry model. You put your entry model at this side of the candle like this. Then what you wait for, like me, your entry at MetaTrader, you put it here at this candle like this. Then you cover the low that strip the liquidity, which is this wick here. You cover each small pip that strip the liquidity. So what you will see that before we get triggered on this stage, we need to see the next candle to break above, to break like this. This is the next candle coming up, coming up, coming up, coming up, to break above the wick of the previous candle. So once you break it, you are being triggered in that trade, because this is the place you place, this is the place you place your entry. So you are being triggered. But in a scenario that the candle go like this, go like this, go like this, and did not trigger and turn bearish, that means what really happened? That means what really happened is that you wait for another bullish candle to form. But in this scenario, let me make simple. In this scenario, let me say the candle go up, and break above the candle. You are being triggered on the trade. So once you have been triggered, the next thing you do is that you target, you put your TP at 1:2. You target 1:2 like this. Yeah, you target 1:2. Then allow the market, you're not going to break even. Then allow the market to do anything. The market may do something like this and to your TP like this. So this is how it is. This is how it is. This in a simple scenario. This is how it look like. So just for recap, you wait for the break of the candle. Then in selling bias, the same thing. If you want to enter for sale, you wait for the bearish candle to close. So once the bearish candle close, at the week of the bearish candle, you put your entry. Then you wait for the next candle open to break that bearish candle. Then you enter for the trade immediately. You may place your limit order. That is what I mean by placing your this. You place your limit order here. Then once you break it, the market will trigger it by itself. So that is it. So this is for this scenario. So let us go and implement this in the chart. So if you go to your chart, firstly you are going to use our direction, because I say this is day trading strategy for beginners. As I earlier tell you, this is best trading strategy. I use this strategy in my community. I've shown you the proof. I also show you the proof of the trade you take this week. For directional bias, which is this EMA, this you may be asked, what are we going to use this for? This for direction, for the intraday direction, that what you are going to trade for that day. What are you looking for? So you need, let me say, once you see something, once the EMA, this is the 50 is greater than 100, and the 100 is greater than 200 like this, that means we are looking for buying opportunity. Let me repeat myself again. Once the 50 is greater than the 100 and the 100 is greater than 200, that means we are looking for buying opportunity. In a scenario, let me show you something. In a scenario that's here, I mean here, the thing intersects, you're not looking for anything. This shows consolidation. You're not looking for anything in the market. So this is for buying scenario. Then in the selling scenario, let me show you also, like here, the 50 is less than the 100 and 100 is less than the 200. That means you are looking for selling bias. Let me repeat myself again. In the scenario, we have the 50 is less than the 100 and the 100 less than the 200. That means we're looking for selling opportunity. That is our selling bias for that day is say for that particular day. We are looking for sell. So this is intraday trading strategy for beginners. And this is what I use. Though I'm not a beginner, but this is what I use. What you can see is that our directional bias for the day, as we wake up in the morning, is buy. Why? We are looking for buy. Why? Because of this EMA, the 50 here is greater than the 100 and the 100 is greater than the 200. In a simple scenario, no intersection, that means we're looking for buying opportunity, as you can see like this. So have that in mind that you're looking for buying opportunity. Let me remove the EMA for simplicity. Just have it in mind that you're looking for buy. Then the next thing is sessioning. So as you can see, we trade only London and New York. So what we have here is the Asia session, London session and New York session. So this Asia session is we use it for pocket of liquidity. So what you can see here is the Asia session. As I've earlier explained, you wait if you're looking for buy, you wait for the downside, which is the sell side liquidity to get swept, then enter with the entry model I've shown you right now. So the next thing you just market your liquidity. You mark your liquidity like this. So what you can see is that during the London was not able to sweep this liquidity, as you can see. So you not enter the trade. You wait for the liquidity. This is where some trader get it wrong. Patience. You need to have the patience of waiting. Wait for your strategy to occur, then implement it. Then once you wait for once you wait for it like this, because let me show you something. Let me say, okay, here is fair value gap, here is order block, and this is break of structure, as you can see. I know. Then you select, let me enter here. This is how you fare on this trade. You enter with this order block here, then put your stop loss maybe below the low here. Do you see it? The market just sweep you and go in your direction. Do you see? So this is how, for you to avoid this, I'm not saying that this strategy have 100% win rate, but for you to avoid some losses, this where you need to wait for your strategy to occur. So you need to wait for it to occur, then implement it. Then what you can see that during the after London, which is the pre-New York here, the market sweep the liquidity with this candle. Let me show you the candle. With this bearish candle here, the market sweep the liquidity. So after the market sweep the liquidity, this is New York. We are trading the New York session. I think you know. We are trading the New York session and the London. We are not trading outside New York window or London window. So the New York open here, very good. Then we are now ready for the next step, which is our entry. So what you can see here is that we have a bullish candle after the 15 minutes candle close. Then we mark the high of that bullish candle like this. Then after marking the high of that bullish candle, what you can see that this red candle here was not able to break this high. This shows that the liquidity is still there. So we was not able to break the high. Then very simple and short, as you put your entry here, let me see, you put your entry here. So it was not able to break it. You're not going to be triggered on the trade. Then once the market break the low of the bullish, candle, you remove your order. You keep your order one side and wait for another candle to form. So as you can see, this one is red. Then you wait for this candle to form, which is the next candle. Then once the next candle form, you take also the wick of that candle. If the candle don't have wick, very fine. The only thing you do is you just wait for the break. So you mark the wick like this, and also take your entry, take your buy limits also back to here, take it back. So what you can see that the next candle break this high. That means you are not being triggered on the trade. So what you can do is you put your stop loss below the low that sweep the liquidity and give it room to breathe because of spread. You give it room like this below the low that sweep the liquidity, and you target either the external liquidity. Let me zoom out so I can see something. Either the external liquidity. For me, I target 1:2. I'll be honest for you. I'll target only 1:2. As you can see, I target this is 1:2 like this. Yes, this is 1:2. So I target 1:2 like this. And you can see this is another pocket of liquidity where you can target. And this is also another pocket of liquidity where you can target. So the market hit the 2 TP if you want to target the external liquidity. But for me, I use this mechanical rule because this is mechanical strategy. I'm showing this thing. This is what people pay for, but I'm showing you for free. People pay for this and I'm showing you for free. So I hope you value this. So pay more attention on this scenario. So target 1:2. As for the market do what you want to do. This is the trade. I posted it on my community, and this is the outcome of the trade. And this is the live NT5. This live NT5 execution. So we go to the next day. So the next day, as you can see, which is Wednesday. This is on Tuesday. Wednesday, let us on our direction and see what we are looking for the day. Very simple strategy. So as you turn up your trading view, the next day, what you can see is that we have for our direction, we have the 50 here, which is the green one. It's less than the blue one here. In order, which is the 100, which is less than the red one here, which is the 200. That means you're looking for sell bias. You're looking for sell. Then what you do is that once you know that you are looking for sell, you have it in back of mind that you're looking for sell, then you remove the EMA for simplicity, this for direction. Then you go to the next step, which is you mark out your liquidity. As you can see, we have Asia high here, which is our liquidity. You mark it out like this. So once you mark the Asia high like this, so during this London is where you enter. You wait for the liquidity to get swept. So during this London, with this massive candle, people will looking for buy, as you know. So what you can see is that this market entice people as this is a break of structure. We are looking for buy, buy, buy. So what you can see is that we sweep this Asia session, and we sweep this Asia session, and we have our confirmation. This is our confirmation. Let me show you our confirmation. This is our confirmation. This bearish candle here is our confirmation. So once you have this bearish candle, you wait for the break of the bearish candle low. You wait for the break to occur. So at like you put your entry model here. Sorry, you put your entry model at the break of this at the break of this candle. So and your stop loss above the liquidity sweep like this, and you target 1:2. As you can see, you can target the next liquidity like this if you want, which is 1:2.4, or you target 1:2. For me, I target only 1:2. So this will be our 1:2 like this. So I target 1:2 like this. So what you can see after hour of markets, which is after the New York session, do the evening time, the market hit TP. This is the market hit TP around 6:45 p.m. 6:45 p.m. and it take 3 hours for this market to hit TP. But probably this to show you that it's not all the trade will go straight to your TP or straight to your SA. So this is for you to have faith on the strategy. This is mechanical strategy that I'm using. So pay attention on it. So let me say here, what the strategy does is that you will not get emotion. Let me see here, you are seeing this candle printing back, going back to your entry. You don't need to fear and close the market. The least thing that will happen before the market to hit your SA. So you wait for the market to play out either TP or SA. No micromanaging or breaking even or closing the trade area due to emotion. No. So you see it like this, we hit TP here. So this the two trade we take this week, and this is the execution, and this is also the NT5 execution as I posted in my community. So this is it. This is for US 500 for this week. So let me show you on GPP. We caught a trade this week also on GPP. This was yesterday, which is Easter. Probably I did not take this trade, but I see this trade. I did not take it because I don't trade Easter market. Let me show you the trade. We call this trade. So this is the trade we also the same Tuesday. Let me show you. Okay, the same Tuesday. As you can see, the same Tuesday we take that US 500. This also another market we caught on GPP USD. So what you can see here is that we have our S. Let me show. Okay, let's just start from our direction probably. So you can see our direction is extremely high. This shows that there is momentum in buying. You're looking for buying that day. What you can see, we have our Asia session. London was not able to sweep Asia. So during the New York session, what we wait for? We wait for London to get sweep here. As you can see, let me zoom in so I can see. We wait for London to get sweep here. We wait for the London to get sweep here. Once you have the sweep, then we wait for bullish candle close. So this is bullish candle close. At the break of the bullish candle close, we execute our trade with our entry model. We execute our trade. So once you execute our trade, you put our X below the liquidity sweep like this. And as you can see, we target 1:2. It wasn't even there. We targeted 1:2. Where is 1:2? Yes, this is where the tip hits. The next morning, during the exercise session, during the exercise session, the end of the exercise session close like this. This is where the tip gets hit. So we hit CP here. So probably this the trade also we take on GPP USD. And also let me show you. I will need to be transparent. This is the execution, and this is the. And also let me show you again. This is another trade. Same day after this one hit CP. On Wednesday, which is okay. This was on Tuesday. This is the same day after the market hit CP there. So what you can see is that we have a sweep here, as you can see. Then at the sweep, once the sweep occur, we wait for the bullish candle. This is the bullish candle here we execute the trade. and you put your exit below the low that sweep the liquidity. So what you can see is that the market take us out. The market take us out. So that means you have complete 3 trades, 1 loss. It's good, man. It's not 100% win rate. I will not lie to you. I need to be transparent. It's good. 3 trade in a week, 1 loss, 1%. Sorry, 4 trade, we lose one, and we win three. We have 3%. We have 6% and 1% down. That means the total of this week, I make about 5% trade because of this loss. Well, it need to be 6%, but because of this loss, it's 5% percent for this week. And I can't scale up. I'm serious. I'm serious. So this is how you can implement this strategy. I don't hope this video is too long. This is how you can implement this strategy. You can rewatch this video in case you don't understand. Like this video, subscribe, and so that YouTube can post this video to people that also need it, like you. And also, don't forget to share this video to your friends that need it. And also, you can join my community. The link is in the description of this video. We have the free community. They are mainly profitable trader because I also give free signals. And also, you have the exclusive community where you can also pay, and I will teach you personally in that community. So the link is in the description. You can make your choice today if you are serious with trading and make money with me. So thank you. Let me even show you the last trade for this week. This is the on Wednesday. So this is on Friday before the week close. Some people in the community call this trade, but I personally, due to I did not trade Easter, so this is it.